Aloha and welcome to Java. Thank you kindly for joining me. It's December 20th, 2024. It is also Friday and the last video I will be doing prior to next Sunday. And that is because of the markets. This is also the second time I'm doing this. So did not get the sound to render with it the first time. And I would like to thank everybody here for letting me know, in specific Shannon, you're always on it. And Quadbin, thank you for making me laugh because, yeah, 12 minutes of silence, exactly what I need sometimes too. So I get that. So thank you all kindly for the support here. I can't, you guys are just wonderful. I can't thank you enough. So, with this, I'd like to mention what's going forward. Markets closed Wednesday, closed early Tuesday, 1 p.m. on the Christmas Eve holiday. So, with this, we've got a lot of light trading that'll be going on next week, not much in. Most will be out on holiday or traveling. So, with this, I'm going to be out of this working on other projects using the time to kind of move forward with the next year. We've also had some problems with YouTube lately with increased censorship and some other issues. So, also looking at developing a couple of alternatives. So, with this, let's go into what's going on with the market today. We've got major rebalance and options expiry. We've got triple witching today. So, let's go into what is going on with the markets. We've got our favorite risk indicator, the MMRI, at 304.8, and this is significantly higher. Now, the relative strength of the dollar is above 108 now, and this is kind of acting like a wrecking ball to other currencies and other economies at the moment. We've got the 10-year yield also spiked and contributed to this, but it's retracing now a slight bit. This should give a little bit of breath to the markets. It takes the boot off the throat. However, it's still on parity with the Fed funds rate, and that's still not good. So, going into a look at the sentiment, we are in extreme fair territory, 21. So, lost a lot of retailers between the last couple of days after the drop. Now, going along with this, the sentiment right now, and not financial advice, but to buy gold and Bitcoin on drops, but wait for the confirmation on their levels. Now, a couple of ear markers to look for, if you will. Gold is showing a lot of support at 2,500 if it gets there. Right now, just above 2,600, if you can see, the only one that's gaining a bit of strength this morning. Bitcoin is showing strong support at about 92. These both could go lower or not even reach those levels. So you just have to kind of watch and see. Keep patience if it's dropping. Don't catch a falling knife. Wait until it sets that level, shows a bit of bouncing consolidation, and then pick it up at the new lower level. So with this, again, the triple witch rebalancing both today into the holiday week. So this is going to create some pressure for stocks. Now we've got oil is also under pressure under the Middle East. Bitcoin down to the 93,000 at the moment and the alts below it. And we've got the futures saying that there is more red to come. So showing weak markets in the offset. Now, when that PCE comes in, core inflation, that could change it. So with our calendar, this is all coming out prior to market open and probably as I'm doing this might come out. But we are looking at the Fed's favored inflation indicator, and this is going to have a definite effect if it's off one way or another. The other gauge they are now looking at is employment. So with this PCE index, I want to speak a little bit about the US government shutdown and the EU trade war. Now with this triple witching, traders bracing for volatility, this is a record high $6.6 trillion in options due to expire in this triple witching today. So, quarterly event coincides with the release of the Fed's preferred inflation report. It's going to be a big day today. Now, we've got also with this the EU trade war. with the incoming administration talking about more tariffs that will be put on the European Union. Not only this, but also the first of the year, their inexpensive or relatively inexpensive energy deal with Russia is about to drop. So talk about that more in a moment. Dollar at a 2-year high ahead of the inflation numbers. We had a Trump-backed spending deal failing in the House and a shutdown approaching. So that is also possibly happening today. If they don't come up with a plan, the United States government will go into a halt until they do. So heading into the holidays, this is also some headwinds for the markets. Now, going back to the EU, German producer prices rising for the first time in 17 months. So now they're not only facing an energy shift issue that will increase, they are having devastating production drops. They will also be facing now increased inflation. Germany in serious trouble. And with this, they could drag down the rest of the EU. So, on the other side, looking to Japan, they also are their currency being crushed by the strong dollar, their inflation rate hitting a 3-month high. Now, the Bank of Japan has a little bit of an arsenal in their pocket in that they hold a large amount of government debt. We've been speaking about this in the Discord, but also a bit here. Now, if they feel too much pressure for their citizens, they could actually come out, take action on this. Um, Aside from hiking their rates, because they've just made the decision to keep them steady, but they could come out just like our Federal Reserve does and manage that. In fact, we've got a couple of Fed presidents coming out this morning, and they will be managing the market as well. So watching Japan, that yen carry trade is not done by any means. So a couple of other things about the real economy for the United States and the pressures that we're facing. We've got several facilities, Amazon workers are walking out on the job, kind of in a strike, and they're saying right now that they're not too concerned about it. And this is mostly because this is a very small percentage of the workforce. However, it's indicating the overall sentiment for them working for them. Along with this, we've also got Starbucks having a planned strike, at the moment only in 3 cities, but it could spread rapidly. So if you want to get your coffee, notice that they're closed, you might want to consider making it home prior to heading out. So with all of this, we've got continued foreclosures and also businesses dropping. We've got Big Lots is the latest one on the chopping block. I'd spoken about them before, but this is because they were trying to close only some stores and make a deal with a research firm, Coresight. Unfortunately, this did not happen. They did not make this deal, didn't pull them out of this, and they are now going to close all of their stores. So they're going to have a major close down, very similar to Bed Bath and Beyond. Could still be purchased afterwards, but it's not looking good for them. So the other thing to keep in mind is that when this happens, they're no longer paying the leases on all of these office locations. And as they're not paying their leases, the commercial backed mortgage securities for these also tend to go under. Now, commercial mortgage backed securities, still a large spectre that has not been dealt with, has not deflated yet. So there's quite a few headwinds for this economy, major cracks showing. Now, we're all aware of this. The bright side of this is that this is the Black Friday for assets. So all of these are bringing in sales at great levels. If you have been stocking or preparing for this, then you can purchase the deals that are incoming. So with this is all that I want to cover prior to the markets opening, and this is getting out a bit late. I do want to wish everyone happy holidays and to remember the most important thing of all is not any of these things that we can. We're all preparing for our families. So the love that you have with your families, please spend time with them. take the opportunity that you can, because you never know when you're not going to have that anymore. With all of that, love you all so much. Thank you all kindly for everything. And I will see you again soon. Until then, my friends, stay free.